second button. Remember to click the second button. All right. There we go. We are ready. Silver first. Consolidating at the moment. We had that new high that was formed on the 1st of March. Had a little bit of a spurt of volatility there and consolidating ever since. This low here looks like support at $78. We're just waiting. The fact that this high did not go above this high here, from a technical analysis perspective, this says it's probably going to consolidate for a little while longer. I would have liked to have seen this try to get back up again.
Who's your
Doesn't make it
favorite
wrong. What's
silver
that?
provider? Who's your favorite silver provider?
Oh, depending on the volume. Larger volume, 5,000 or more, I would go to New World Precious Metals. And I always encourage people to go through whatsupcanada.org because that link attributes that referral to Wayne, and that supports his show. But New World Precious Metals is for larger amounts. Locally, and if you can get some local, great. You're gonna have to do some shopping and call up the various dealers that are in your area to see what kind of availability there is. Outside of that, the next local would be Silver Gold Bull. And I liked silvergoldbull.ca because it was easy enough to order and they shipped it right to my door.
Did you know that there's a DNA silver round?
Yes, I recently learned about those. Well, I think actually I learned about them the first time like back in 2018, but I never went with it. I never went down that path. But yeah, they're great for, well, it's verification, right? Verification of authenticity.
Okay, sorry. Carry on.
Oh, don't be sorry. That's good. Good question. I'm just looking for. There we go. Needed to do that.
Is that what your silver's going to buy?
Yeah. Yeah. Gold still on top of that long-term pivot point there. That's encouraging. Silver, it's not in a bad position. The fact that we have these higher lows consistently is very, very good. Gold, though, is clearly hanging out above that pivot point. And I think that's just because the world is in pensive anticipation for what will happen next. Pensive because they want to know where the best place to put their money is, and anticipation because they know that it will be very clear. There won't be very much ambiguity as to what is happening next once they see what happens. I think we're waiting again. I think we're waiting for, an escalation, especially in oil prices. The gold silver ratio sitting at 60 ounces right now. And now we have this happening where the markets are certainly creating some lower lows over the last little while. Not a good look. The next market structure to break through would be that $45,000 range. We'll see how the rest of this week pans out, whether or not it can maintain this level here.
If it breaks out 45,000, that's almost like a psychological, like, oh,
yeah, uh-huh.
It's like hold on to your pants.
Yep. The $50,000 DJI thankfully was good enough to sidetrack people from the Epstein files, and now they have bigger problems, and that is a crashing economy. This, yeah, you're right. And I think that then again, that if it's not able to maintain that 45, then it's not going to come back because, oh, look at that. 45 is the triple top. Isn't that something? Just kidding. Let's update our gold prices here. Getting out the calculator. US 30, 46,906. Divide that by the price of gold sitting at 51.24 right now. We're down to 9.15 ounces. Over on the silver side of things, 46.9 divided by silver, 85.20. We actually went up a little bit on this one, and that's simply because that price has, since we last did this, the price has dropped quite a bit on this. Gold, remember, gold maintained itself. Silver didn't make as much of a high. Long term, it doesn't really mean much. Just in the interim, we see that fluctuation. Right now, we are watching the oil prices simply because of how much of an effect this is going to have on the global markets. Japanese markets in particular. We chatted about this last night, Next Gen Merchants. Oops. So, from a technical analysis perspective, oil is headed for a pretty nice high. In fact, I'm going to go ahead, zoom this down a little bit. We're going to grab our projection tool. We don't use this when we're determining entry points and exit points. What we use this for is determining extensions. Where is it going to head? It can be a nice guide. But we can see here this impulse that first went up right after the war started, that impulse, that rise of 84% in the price of oil, that has retraced, come down, and actually bounced off of the 23.6 level. So what does that mean? Likely we will see an extension, some resistance around that $133 a barrel. But then beyond that, we'll likely see a spike up to 154. So it's quite a range between 134 and 154. Is that right? 132, 154. That range is pretty broad, but because of the volatility that we've seen, look at the volatility, good old ATR spiked up, we'll likely see some more. And I think this is going to be done this is the stage of the war where it's economic. Countries are simply fighting over dominance over energy right now. Who can maintain their composure through this? I think with Trump having announced that he was releasing, I think it was 115 million barrels or something like that, just to help alleviate the high prices. Well, it didn't do anything because he did that on Tuesday. So that was Tuesday when it was at the low, and he's like, oh, let's flood the market with a bunch of reserves so that we can keep the price low. Well, way to go, buddy. Still went up 22%. That goes to show you how much of an impact America really has in the global markets today. That normally would have worked. Why wouldn't it? Does anybody know? Anybody stab a guess why that didn't have an effect this time?
But it didn't have an effect the last time he did it, because didn't he do this in his first administration where he opened the floodgates, or was that Biden? Either him or Biden opened the floodgates and depleted the U.S. Strategic reserves to decrease the price. And if I'm recalling correctly, it really had no great benefit.
I do know that he did something with the reserves, but that it was the controversy was when Biden did it. Trump said that was the dumbest move he could have done. I do remember Biden did it as well, but yeah, it didn't have an effect then. But the reason there is the same as today.
The
Typically, that has an effect.
January 20th, 2020 is when Biden took over, and oil plummeted until its low on the 20th of April, 27th of April.
Hmm.
But then it shot right back up. Like, I mean, it went just
All in one day,
zinger.
or 1 week. Yeah.
No, I'm looking over several weeks, like over a year. It went from 66091. Yes, holy cow, that was low. It went as low as $6 a barrel up to 130 in
Quite the range.
2 years, 672 days.
Yeah. Yeah.
That's a 1,700% increase.
Uh-huh.
Holy cow! I didn't
Isn't
realize
that
oil
wild?
had dropped that low.
Well, I remember in February of 2020, oil futures, I think it was 5 year, oil 5 year futures, you could be paid to get them. They were in the negative, where companies were actually paying people to take the oil off their hands. Futures again, futures, contracts. And that U.S. oil literally went to zero for a moment. But you're right, that $6 was kind of where the banker's candle finished its deed, and then yes, proceeded. Isn't that something, eh? 1,000%, 10x. Well, that 10x, the let's go back. You're right. Biden did it. I know he unleashed a bunch of reserves, but it didn't do any good, and I know why it didn't. And if I remember correctly, he did it like halfway through 2021 or something like that. And if I remember correctly, Trump did it as well, but I don't recall when. But it was before COVID.
So when was the pipeline question quashed? Was that under Obama? I think that was Obama,
So that
wasn't
was
it?
Yeah.
under Biden because
It was Biden.
um,
Okay,
the one that goes from Alberta to Texas, that was really close to being approved in many of the states. And then Biden came in, and on his first day of acting in office, he killed it.
okay,
Oh,
so
yeah.
that's probably why the crash then. But then it brought it back up because it focused on U.S. oil.
Right. Yep. Yeah, that makes sense. Here's again, I might be this is speculative, but when the markets are flooded with reserves, typically speaking, that will drop the demand, and that drops the price. But it's not doing it this time because US does not have dominance with oil like they used to. Remember that 50-year contract from 1972 ended in 2022. That was the 50 years. It was over. And so the world knows that the US's hand in the manipulation of oil no longer has strength. It no longer has the upper hand. It doesn't have the negotiating power that it once did. So States goes ahead, floods the market with a bunch of oil reserves, or at least announces that it will. Whether it actually has or not, I don't know. I haven't confirmed that. But saying that, the world doesn't care. And so crude goes up. And that is detrimental. That's very detrimental to especially the Asian market. Asia has increased their reliance on oil by a factor. Well, this was back in 2027, or is it 2017 rather? They had increased their demand sevenfold since the 70s. And so they have a reliance on oil now. And given that China has a debt ratio, I can't remember what that is now either. It's been so long since I looked these things up, but their debt ratio is not really that much better than what the US experiences. They're not experiencing it at the citizenry level. At the national level, they're in a lot of debt. And so with this spike in oil prices, it's a major shot across the bow for everybody. And I think that what we're going to see is another shot, and that it's going to be coming from the likes of Iran, because China and Russia have vested incredible amounts of infrastructure to help Iran become a force in the market. And so I think this economic war that we're watching unfold right now isn't Iran trying to screw over China, or the Middle East trying to screw over China, because the entire Middle East simply doesn't want to do business with the US anymore. They're done, and rightfully so, because of the havoc that the US created in their pursuit to maintain their $4 a barrel. This is simply a warning shot to the world that we are now in charge of the oil prices, and because we are going to make it very difficult. We're going to they're going to make it very difficult and then provide a solution, which is a renegotiation. The renegotiation of the energy contracts has been the focal point of the conversation about the world markets for quite some time, especially going into this whole AI stuff and everything. Like, they're going to make it look like this is what's necessary until the people start microgeneration. It's not going to be like people are just so dependent on this in order to keep their internet connected. And if they don't have their internet, they're going to start screaming and crying. I did property management, and if the electricity goes down, it's an emergency. But I can tell you right now, we got more phone calls if someone's internet was down, because it's more of an emergency if the internet's down than if the electricity is down. You could have electricity and no internet. As a property manager, you're going to get more phone calls than if the electricity goes out. Isn't that crazy?
That is crazy.
Yeah, that reliance on tech is what the elites, and I say elites, they're all in on it. All these countries that are negotiating oil contracts, they're all in on it. They all know that none of this is necessary for us to have energy. In fact, I'm of the mind that they go ahead and do this, but that they don't actually pay for the energy that's delivered. They have us convinced that we have to pay for it, and so we pay for it. But that since Tesla was ousted from the inner circle of producers, that they've been just producing it for free this whole time. I mean, what would you do if you were evil and you took out Tesla's tech and be like, oh no, you can't do that work anymore. We can't keep funding your work anymore. There's no profit there. Of course you're going to take him out and take his tech and produce free energy. I mean, that's just how it works. And what they've done since that time, I believe what they've done since that time, either through by making by employing or leveraging rather, by leveraging Tesla's technology, or simply by virtue of them collateralizing the social insurance numbers and social security numbers, they have complete stranglehold over the economic futures of all of these people. And that they really are wanting, this is all about optics. What they want is a reaction from people. And so all they have to do is make it look a certain way to get people to have their predicted response. Like, for instance, this is a controversial topic, but the assassination of Charlie Kirk. It wasn't. I think I found out 4 hours afterwards, after it had occurred, and the first thing that I thought of was, I wonder what the algorithms anticipate. That's what I thought. Because I knew that how the people responded to that would have a greater effect over the course of history than the assassination itself. And that the assassination was, whether it was real or not, because there's tons of conspiracy theories that he's still alive and enjoying life somewhere else, but whatever, doesn't really matter. It's all about the optics. And that the people's response to it was calculated, but more importantly, recorded, so that they have the data necessary for when the next emergency occurs, so that they can form the language around that next emergency to exacerbate the problem. How do I know this? Because social media companies are already doxing content that was clearly not written by an LLM. So think of it this way. If you have a business and you want to market your business and you want people to see the value of your offer, and you communicate it with all of the authenticity that you can, because you've been doing that for 20 years and you've been helping people for 20 years in your field of work. And so that you have even a positive testimony from people saying, yeah, this guy does great work. You go ahead, market that message, and because you did not use LLMs to generate the content, your content will not be presented. It will be what we call shadow banned, in the sense that it's censored, that people aren't going to interact with it because they simply won't see it in their feeds. Why? Because your competitor that has been in the business less time, without testimony, can simply take what it is that you're saying, have it represented by an LLM, and the social media companies will have that post displayed as much as possible. And the same thing occurred when Facebook they released the going live function. If you were creating live content at the time that Facebook released that feature, you were getting traffic like you wouldn't believe. You were getting so much visibility. It was 60-70% of your page's followers would have got the notice that you went live. In fact, many times when they would go to log in, it would be at the top of their feed. The pages that were going live were at the top of the feed. They always push the new features because it creates such a powerful data set for them to then make their adjustments and improve upon the business model. And what's the business model? Keep people paying attention. It's the attention economy, they call it. That's the goal. So I went down that rabbit hole because we're talking about oil prices, and that the people are of the mind that this is going to dictate the volatility of this, or the price of this is going to dictate their quality of life. I get it. It already is affecting people at the gas stations. I get that. And that's a big burden for a lot of people. And that long term, that burden does get passed down into the grocery bills. Absolutely.
More quickly than you think. Grocery bills go up, they rarely come down.
Oh, yeah. Yeah. And that because the people are that way, I have to remember that there is a positive side to it all. Don't see it right away, but the positive side being that it's going to create a need, a deep desire for more autonomy over energy. And I believe that desire will be combated, that those who have control over the sources of energy will scramble like they did in 2020 to bring about an emergency that keeps people's attention elsewhere. And they can do that now, mathematically, even algorithmically. They can predict what will keep people's attention because they've got the data. Yeah, all we really have to do is just either assassinate someone they like, or at least create a video that shows that that's what happened. That's going to be the and if it's not an assassination, that's just an example. It could be, you know what, there's talk about the new vaccines that need to be rolled out. I just saw that article that they've changed the classification of the mRNA therapeutics to what did they call it? It's not genetic therapy, it was something else, but something to do with genetics. And because of its classification change, they no longer require informed consent to give it to someone. I better look that up. This was on X earlier today.
I saw that the other day.
Yeah, you too, eh?
Yep.
I've read that a couple of different times, where one needs to be very cautious when going into the hospital and reading those documents that you have to sign, the waivers and whatnot. They don't tell you that they're going to vaccinate you. They tell you that they're going to give you biological agents or other types of quote unquote biological substances. And they're using accurate language, but it's obscure as to the meaning of the words that they're using.
Right. Yeah. And I found the word. It was Dr. Jane Ruby that posted it. Hospitals have quietly reclassified vaccines as biogenics. Biogenics, they don't have to have your consent to give it to you. I have no idea how that works. I figured that if they wanted you in one of their rooms, you had to give informed consent. But apparently now they can give you things without. I didn't even know there was such a thing.
This is maybe a little different, but I was in the hospital for some surgery a little over a year ago, infection in my hand from a dog bite. And I ended up with infection because I would never go to a doctor and I couldn't handle it myself. But anyway, first of all, I had AHS come to the house here. I asked them what was in the IV. We don't know. I had to do something, and I didn't have other resources. And then I ended up in the hospital. Anyway, there's quite a bit. But anyway, after the surgery, nurse came and I'm awake. Nurse comes in. she's going to give me this needle. And I don't know if she told me it was blood thinner or not. And I said, well, do I need blood thinner? And she says, we always give people blood thinner
Yeah.
after an operation. Same thing the next day. Came in, a different nurse came in. No, you're not giving me that.
Yeah.
I just did myself well enough so I get the hell back out of there. But anyway, it's a little bit different, but you know, they're dictated to. They're good people, some of them, but they're told to follow this procedure from up
Yep.
above.
Yep.
So,
You
anyway,
better
just
check
sharing
those
that.
boxes. Better check those boxes while you're on your shift. Otherwise, you might not be called back for another shift.
Correct.
Yeah, I remember hearing about that when I was in property management. One of the people that were renting the condo, one of the condos that I was overseeing, and she said that she would just become a nurse, and she was in it for like 3 to 4 years or something like that. It was a very small amount of time, and she was already trying to get out because she felt sick to her stomach that she was just following orders. And she was like, yeah, but I learned this in school. And even in the hospitals, they were like, yeah, but we don't do it that way here. And she's just like, well, why did you teach it to me? Yeah. Bitcoin, the gold of the digital era. Digital gold currently at a dominance level above 59%. That's a pretty good level. This rise came in because of the huge inflows. People recognized, oh, we've got a bunch of inflows coming in for ETFs, and a lot of investors were piling on over this last little while. And it makes sense. I mean, if you consider, this downward trend that started all the way from the end of January, it was bound to be broken out. We didn't create any kind of high ever since that. Well, when it came up, where did it go? Didn't go up to the previous high. It went to that previous resistance, just below 60%. So it doesn't mean that we're not going up, but it certainly indicates that we are simply consolidating right now. Overall, we would need to see a high actually break out over and above that 60% line and then use it as support within days. That would be the only way that I would start to I would believe that Bitcoin is going to maintain its dominance. But this consolidation that we're in right now, this is simply timing. I see it as timing that coincides with ETFs being brought forward. We see a lot of ETFs. Solana just got a whole pile of ETFs issued. Polkadot just got approved for its first swath of ETFs. XRP had a bunch of ETFs get brought in as well. So this. I see this as still setting up that stage. Prices are down. I've been saying this for 2 years now, almost. Prices are down, I know, but this is where they keep on buying. And we see that happening at the institutional level, and that the people simply haven't caught up yet. I think it's because they're distracted.
Are they? They're doing to cryptocurrencies what they did to silver and gold and even money in general. Is
Yep.
they've hypothecated it to such an extent that they've there's another word, not hypothecation. I had that word the other day with you, Paul. Leveraged.
Hmm.
They're leveraging it.
Yep.
So they're actually
Absolutely.
not buying the cryptocurrency with the ETFs. They've just been given authority to create the ETFs. And so it makes it look like they're buying the crypto, but they're not.
Right. It's not on chain. It's no different than, we're not going to buy the physical silver and sell it on the markets. No, no, no. We're going to buy contracts for the prices of silver in the future. Because it's like as meta as people on YouTube watching videos of people watching YouTube.
So what happens when those, it's unlikely that in the foreseeable future, those ETFs are going to go the way of the dodo bird.
Oh,
But if
yeah.
but if they did, it would collapse the securities market. But what would it do to the actual price of the coin? Would it skyrocket? I mean, what's happening with silver and gold?
Yeah.
They can't satisfy those. Can't satisfy the contracts in actual physical silver and gold, but with ETFs, you're not actually anticipating that you're going to actually have Bitcoin or Ethereum or XRP or whatever. You're never expecting to have any of those in buying the ETFs. I've got a friend in Vancouver who's, man, my investments in crypto has just gone way up. And, he's smart too. So he should know that he's not buying the actual coin. All he's bought is paper.
Yeah.
That has the name on it.
Yep.
He doesn't
And I
have the
think
crypto.
what we're going to see is the same thing, but at a monumental scale as to what happened in the 90s with high frequency trading. People were able to start pushing buttons to buy and sell with their own money directly with a computer in their living room. You had to jump through a lot of hoops to trade on the stock market prior to that. At best, you could do it at your bank. But then when it came to the MT came out, MetaTrader they call it. That software changed everything. Now anybody could go ahead and just do it in their living rooms. Now there's MetaTrader 5. 5 versions of it, and you can run high frequency trading with those whenever you want. And that high frequency trading bubble that came forward in the 90s resulted in an increase of liquidity by 20% in the foreign exchange markets. Yeah. The equivalent of if we went to adjusting for inflation, if things would have continued as they were without people being able to make these digital transactions in their houses on the stock market and on foreign exchange markets, the volume of foreign exchange traded every single day would have been $4 trillion. But by 2017, it was $5 trillion, simply because they were able to add the retail markets. That's retail traders. That's us. We're the retail. Because we're the end consumer. We're not an institution going and putting up institutional money. No, we're putting up our own. And that there was one of the greatest extractions of wealth that we've seen ever in any market, simply because of how available it became. Well, just think about it. Now, I don't have to go to a living room to trade. I can do it with an app on my phone. And I can also subscribe to a bot that will do it for me. But we're not going to the stock market anymore. No, we just got to go to an exchange. And the exchanges, what are they? They're just selling stocks. All of these coins are just stocks.
What is institutional money? Like where do those funds come from? Is this like the corporation's profits and things?
Yeah, good question. So this is where you get into fund management, where you have, typically speaking, you're going to get the money, you're going to get the liquidity from people in insurance. So you're going to take the money out of people's, like, those are the guys, those, they're they're just a little bit more. I don't know how you put it. Maybe they have better hygiene than a used car salesman, but really ethically they're around the same level. Sandwiched between used car salesman and mainstream journalist. You've got these other guys that are insurance salesmen.
Ouch. Ouch. I
You
used
just
to sell insurance. Ouch.
Yeah, and I'm sure you dressed very nicely for it too. I'm quite confident of it. No, I'm kind of being mean. I recognize I've met people in that industry and they're great people. But the point is that those deals, they take that money in, and of course that's locked. So then what you have are proprietary firms at that point. The proprietary firms, they are the ones who are in charge of managing those funds, and their job is to make those funds grow. And the biggest scam still to this day goes on every single day were the Libor scandals, Libor. And the Libor scandals leveraged insurance money to the tune of 500 to 1. We talk about how bad it is that they take silver contracts and sell 300 ounces of silver on paper for every ounce of silver that's actually been coined. We think, oh, that's terrible. Yeah, well, they did that with insurance money to 500 to 1. And institutions are the ones that get hired to manage those funds. So the JP Morgans, when JP Morgan employees show up to trade for JP Morgan, they don't look at charts. They have a whole other type of dashboard. And that dashboard actually shows them the second by second sentiment. So they know exactly what people are thinking based off of the positions they're taking. By the early 2000s, the technology was already in place where people who are using online trading platforms. Does anybody know what a heat map is? How to
Nope.
bring this up. So you can set this up. Hotjar, yeah, it's been a while since I was in this. But Hotjar is a program that you can install on any website you want, any online platform. Hotjar, what it does is, and right now it's active. Okay, Hotjar uses this on their website. So right now you can see my mouse moving around. What Hotjar does is that it tracks where my mouse is on the page. So if I'm up here, and if a lot of people put their mouse up here, Hotjar has a dashboard where it shows you where their mouse is. They're not even clicking. They're not even taking action. Well, yeah, they are. They're moving their mouse. That's an action. That's an online action. And so when you agree to those cookies and all that stuff, yeah, they can track that. That's what Hotjar does. They provide the service of heat mapping your website to analyze its performance. And they can determine what needs to change. They give the feedback to you saying, here are some strategies that you can consider in the design of your website to get people to click through more. Okay? But this is just a heat map. Okay. Well, this heat map technology was already in full deployment shortly after 9/11. In fact, 9/11, if you take a look at the Patriot Act, and the mass surveillance policies that were implemented, thrown into there, interwoven into that legislation, it shows that now companies can track people's eye movements through cameras on their computers.
Oh, shut my camera off.
Yep. So, of course, they would make heat maps for mice. Okay. By 2005, the online trading platforms, all of them, had heat maps. And the heat maps were giving the data in real time to the institutions. So it wasn't necessarily, what are you going to do? Or it wasn't necessarily, what position did you take? Because that tells us what sentiment you have. No. They could tell which button users were hovering over. Was it the buy button or the sell button? And in real time, they could see what was going to happen before it happened. Minority Report. Just look at the data. You can tell what people are doing by the data. And they all got their digital identifiers, username and password, all signed into their online platforms, and they're clicking buttons. Meanwhile, the institutions, when they show up for work, they're not looking at the charts. No, they're looking at the heat map over which buy or sell and preemptively placing their positions to get what's called arbitrage. And they do the high frequency trading, but now they're doing it in response to the high frequency trading that's already occurring at retail level, simply because they've got that data.
So it's like an algorithm, really.
Yeah, totally. And in fact, all of the exchanges, like, let's just go ahead. I'm going to go ahead and let me see here. Do I have an exchange here? I don't think I have an exchange in this profile. I would have to go to Opera, and that's a lot of work. So I'm just going to go to Muesli Swap. This is a DEX, okay?
Yep.
But as a DEX, it's still able to do what centralized exchanges do. And there we go. All right, I'm going to connect my wallet so that we can see buttons. All right, so here I am. Who am I doing this? Let's do it as next gen versions. Okay, so here I am at the markets. I'm going to say, let's grab this token here. No idea what this is. Oh, and it's just terrible. That's fine. Here we go. What am I doing? I'm going to instantly pay this much ADA, and I'm going to get this token. This is the same type of format that we see on Kraken, Endex, Binance, you name it. There's a place where you can put in what do you want to pay and how much stuff do you want to get, and then there's a button. You're going to go swap it instantly. Now, on the exchanges, it's buy or sell, buy or sell, buy or sell. And they can tell what you're doing because they all have the heat maps. Oh, and all of the exchanges, who owns them? BlackRock, another institution that has all kinds of subsidiaries underneath it that act as proprietary traders. Hey, you're really good at looking at data and responding to data. You sit in front of this computer and push the buttons when we say you're going to push the buttons, just based off of the graphs that are on the thing telling you which way to go. They don't even know, many of these guys, they don't even know they're looking at market sentiment. They're looking at a graph that tells them what to do. That's all. They can color that graph, they can put parameters on that graph and give it direction whichever way. And where we're headed is that machines are just going to do it, because what are they doing? They're pushing buttons. You're paying someone what? There was a guy that was on TikTok, and he said it perfectly. I've been saying this for years, but he said it perfectly and in very, very short order, probably under 2 minutes. He asked AI, he said, approximately how many hours do I work a year? 2,000. Okay, well, out of all of the actions that I take with my job, approximately how many tokens would that be? Oh, that's about 2 million tokens. Oh, no, 5 million tokens, sorry. Approximately 5 million tokens a year is how much data you produce. So then he said, well, 5 million tokens, how much does it, I mean, I get paid $70,000 a year. How much does 5 million tokens cost if a machine were to do it? Oh, about $120. So his $70,000 a year is overpriced now by approximately 69,800 and whatever, 875. He's overpaid, way overpaid. So of course he's going to get replaced by a machine because now those 5 million tokens can be conducted. Oh yeah, and by the way, how many tokens? How long does it take to burn through 5 million tokens? There's a good question. I haven't figured that one out, but I can do that math pretty fast because I know how fast these models work. They work between, depending on the model, between 50 and 80 tokens per second. Okay, so let's say we're on the low end. We're getting a slow machine to process these 5 million tokens at 50 tokens a second. It's going to be only about 100,000 seconds. What's that in minutes? 1,600 minutes. What's that in hours? 27. 27 hours of compute costs about $125. And it will be done in 27 hours instead of a year.
Yeah.
And that's why we're watching the charts. Because all we have to go by, we don't have the access to the data that they do. We have access to the result of the data being implemented and action being taken. And we are simultaneously, what we are watching is people's reaction, emotional reaction to what they're doing. That's what we're actually watching. Goes back to that, goes back to the feedback loop. What do we need the people to do? Let's make the appearance of things. Let's give the emotion that we want them to experience, right? So we look at oil. What's the emotion that people experience when they see oil prices go up 75%? When they see the gas prices rising 50% overnight?
Fear, lots of fear.
Yeah.
So on that point, the fear and greed scale on CoinMarketCap right now is 28.
Yep.
And that's much higher. That's double. It was 14 last week.
Yep. Yep. Things are improving.
Meanwhile, gas prices are going up.
Yep.
So
That is telling, isn't it?
yeah, gas prices going up. Things are getting more expensive. So, something's going on that to me doesn't match. If the Nikkei is in a bad way, and if the U.S. 30 Dow Jones is in a bad way compared to, or what did your chart show? Yeah, that's gone down for the last, since February 9th. It's been on its way down. So for over a month. How come people aren't afraid? You would think that it would have gone, instead of going up to 28, it would have gone down to 7 or something like that. I don't know. And maybe it will. Maybe it's just like that little detail in that little spike on Bitcoin or whatever. It gets everybody back in the game. Oh, it's going back up. It's going back up. Let's get back in. And then all of a sudden, she tanks back down again, pulling people in.
Yeah. Oh, yeah. I see that happening, especially if Bitcoin can get above here again. If Bitcoin goes above that $100,000 psychological level, yeah, that's all in here. This is that. I'm going to mark that right now. Once it gets above here, you can bet your boots people are going to be all excited again. Because that's that previous high, right? From the middle of January. Bitcoin's down 28% from January. And the fact that when we were going down into this realm here, when we were heading down to this sea, I remember that it was 14. Just like you said, half the fear was even lower than what it is now.
So if it goes back up to 98 and above, it hits that previous high. Are people going to say, "Yeah, I'm back in the game," and all of a sudden, people are more bullish, less fear, want to take advantage? Then what's going to happen? They're going to tank it again.
Well, I think that what they're going to do is really ride this one, and they're gonna ride it for a few months. When
Okay.
that starts, I don't know. Again, I think it's going to be an emergency. Like, think about it. We've been talking about this a lot throughout this time, right? Let's get rid of this here. Doesn't need to be there anymore. The triple top. We had the accumulation and then COVID. And then what happened there? People said, "Oh, we lost all, $4 trillion were swept out of the markets." No, they weren't. Because what happened? Kids went to school online. Zoom became a household name overnight. And it just was the first wave of digital identifiers being implemented. This also coincided with the implementation of digital ID tracking. Wasn't official, but it was the start of creating digital IDs for all of the immigrants.
Do you think that there is a graph for the fear and greed cycle? Like, does anybody have that? I've never seen one other than this thing on CoinMarketCap. But these are one of the things that they don't chart.
Yeah, you're right.
And if they did chart it, overlay it on top of the chart that have a overlay it
Yeah.
and see what it shows. They don't chart the ranking of these coins. They don't chart, altcoins. Well, I guess they do chart it, that Bitcoin versus Bitcoin dominance. But
I wonder if it's an overlay that they keep for themselves,
yeah,
because that would be a very powerful tool.
I have been looking for this again. I don't know that I'm gonna get it. I want this, but it says that I have to sign up for it, and I can't believe that I have to. I've went for years without having to sign up for it, and I haven't been able to see this. I haven't seen this chart in probably 2 years.
IG Bank.
Yeah. So IG used to provide for free market sentiment reports, and that there is kind of what you're looking for.
Yeah, well, as long as it's not 2 or 3 days old, and then that's an eternity, and
Oh
this
yeah,
realm.
yeah.
It has to be live.
Yeah, it has to be live, but that it does show the daily. I gotta find that. That's maybe I have to sign up for IG to get a broker's account there. It says that I can access it on DailyFX and IG for free. Okay, cool. Well, I might just sign up for that and get that, because that essentially is what you're looking for. What's the market sentiment? Fear, people fearful or greedy about it. And that just means, are they going long or are they going short?
So would that be equivalent of heat mapping?
Yes. It wouldn't be real-time heat mapping, but that because the free stuff isn't going to give you that. Like, If you're getting
No.
market sentiment, you're not going to get the real-time data. However, you can see the patterns. You can start to see, okay, well, the when it goes, you can see the pattern and how it responds to the price action. And you can get an idea of, okay, so now we've got a crossover where sentiment is going down, but price just crossed that line. And that can be an indicator
An
that
indicator. Yeah.
the sentiment is ready to reverse. And there are other factors to take into play. But that, typically speaking, when I was trading Forex, the trades were across longer periods of time. And the reason why was because it was easier to know what the sentiment would do. I don't have the data at the lower frequencies or the higher frequency. So I used the more macro sentiment data, and I was what we call a contrarian trader. If the majority of retail traders had a specific sentiment, then I was always prepared to trade the opposite direction until their sentiment changed. Once they switched their sentiment, then I stopped trading in that direction and I waited for a different confirmation to get started again. And you're right. Now that Bitcoin prices are just as reflective of the true price of Bitcoin as silver prices are reflective of the true price of silver because of those contracts. Remember, all of these ETFs, they're issuing them. I don't know what it is now. Shouldn't talk so much. I really shouldn't. But starting here, for that first year, they were issuing ETFs at a rate 6% faster than Bitcoin could even be mined. And I remember Alex Becker saying right after, like it was January, February of 2024, his tweet said, "There will never be enough Bitcoin now. They have now created the artificial supply." No different than they're doing with oil or silver.
Everything.
Or
Everything.
everything.
They do.
It's just another market.
Yeah.
It's another market.
So how do you were getting back to when we were talking about the ETFs leveraging and all that kind of stuff, you were starting to say something. I think we got distracted. How's that going to affect or impact the price of Bitcoin or Ethereum or whatever coin has an ETF attached to it? Like, how is that going to?
Good question. It's going to increase the volatility. Simply because they will be simulating volume that doesn't exist.
So in the same way that silver has come to the silver and gold markets have had their come to Jesus moment of, oops,
Yeah.
we don't have enough silver or don't have enough gold. All of a sudden, oops, we got to do something. So what do? I don't know what they do, but it's going to be the same thing with these coins.
Yep.
They're going to have ETFs worth billions or trillions of dollars in Bitcoin, knowing that there's less Bitcoin on the market than what they're selling the ETFs for.
What's the if it stays at 6%, which I doubt it will, but if it stays at 6% and they can maintain that, how long will it take for them to double their ETF treasuries? 12 years. And I think we're going to see a cycle of about 10 years from when we blast off and officially go into this next wave, right? And I say the next wave, it'll be very identifiable by the event that creates the necessity for more digital IDs. Because that's what this is all about. It's all about the digital ID, and they need to make sure that people get on board with it as much as possible. The The vaccination program, that was the same narrative that we're going to be seeing for the next wave. It's just going to be a different it's going to be a different application, but the result is the same, and that is more digital IDs. We got a whole pile of people into Zoom. And isn't it funny? You know, AI has been worked on and being developed since the 80s. And then all of a sudden, AI comes out 2.5 years after COVID, when everybody goes on to Zoom. Yeah, Zoom was taking that data. They told you that they were taking that data and giving it to their machines for analysis, because they all slide it underneath this one little, what do they call that, clause, where you're agreeing to us using the data so that we can create a better user experience. We use that data to determine how we can make the system better so that you have a better experience with using our product. And people say, oh, I like that. Well, typically speaking, people don't read it, but that's what occurs. People consent to that stuff, and then it just snowballs. Of course, AI came out. Why? Because the hundreds of thousands of hours per day that were being generated by people's voices made it where now the AIs were able to conduct incredible feats. I remember months into AI, there was a doctor that was literally sweating on TikTok, saying that this is getting out of hand, because he said, I took client files and put them in to have a diagnosis, and it did a better job than I could with gear, with testing equipment and all that stuff. And it was comprehensive report. This was months after ChatGPT came out. Why is that? Well, because AI is just a probability machine. Calculator. It calculates probability. It's like a fancy autocomplete. That's all it is. It's just a fancy autocomplete. So when you have tens of thousands of hours of medical data being produced on Zoom because we have to shelter in place now. Of course, that's going to get used to improve the machines. So the next phase is going to be something that gets everybody to sign up for. It's going to look like this. People are going to be fearful, and they're going to be promised that everything is going to be okay. You know, it's like, I remember, I don't know if anybody saw Transformers, so the first Transformers that Michael Bay produced. A hilarious line at the end, because the parents of the main character there, they were still like, they recognized now these mechanical aliens came and visited and all the rest, but they were saying, but everything's going to be okay because the government said so on the TV. And so people are going to go along with it, and they're going to sign up. And this here, what we saw, this growth that we saw, was not because the markets were worth that much. It was because they printed to oblivion, increased the value of the market by 100%, by a factor of 2. They doubled the size of the market in a matter of 625 days. They doubled the markets. But just out of curiosity, during that time when you went to the grocery store, did the groceries drop by half? So then they're lying. But what the real lie is that during this time, all this money that people were pouring into the markets was just being used to develop the AIs. And look, January 2022, prices started to go down. And October 2022 is when AI became publicly available. ChatGPT was released and you could sign up on a website. Oh, high frequency trading of what? Data. Don't worry, we don't have to get them involved in all all of the foreign exchange. They don't have to sign up for a trade account with what's it called, Wealthsimple. They don't have to start trading from their phone. They don't have to start trading stocks. No, 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 no. We're just going to get them to generate data.
Is there a way in which one can see that trading of data as a stock?
Yeah, even in here in TradingView, you can, but you have to pay. I think it's what's the fee for this thing now? I don't know, $600 a year or something like that. You can get that. There is also this. This may provide some insight. Let me just see. It's been a
Because
while.
you
Just
talk
to-
frequently about data being the largest traded commodity.
Yep.
It would be nice to see where that is being traded.
Yeah. Huh. How does one determine that on a chart? That I don't know. I mean, the way that I extrapolated that was simply recognizing where money was going, and it was going to the tech companies because we gotta make sure that if the people are going to be able to automate the creation of their data, that we position ourselves to be the creators of the data, the actual ones with the infrastructure so that people can do that. Sam Altman just said yesterday that AI needs to be a service that everybody signs up for, no different than their cell phone and internet. Everybody, he said, everybody is just going to have to sign up for a monthly subscription so that they can live.
So then
Data is
would it be a thing to track those companies that are building, paying for that infrastructure as a means of seeing where the money is going relative to data collection?
Yep. Pre-IPO. This is all pre-IPO. I don't have access to that data. Yeah, they've got it here, but I don't have access to that data with this subscription. Yeah, you want to follow the companies that are the ones providing that infrastructure. So, for instance, BitTensor, and I've got colored bars right now, and I'm just going to get rid of that so that it doesn't provide confusion. BitTensor just finished getting some all-time lows in here. 2020 February 2026. This one here is newer, right? This is going to be, it's not going to be a household name, but it's kind of like, people don't realize when they're going to a website, like right now, this website here, I'm on TradingView. But do you know where TradingView hosts their content? Where are the servers?
Mm.
Amazon. Right? And over 70% of companies that provide online web apps are using either Google, Amazon, or Microsoft.
So then those would be the ones to be following well, at least the major ones to be following as for how the data is, how they are investing in the infrastructure to harvest that data more proficiently.
Yep. Oh yeah, it's Alphabet, not Google. Alphabet is the holding company for Google.
Right.
So here's COVID. Oh no! Google goes up during that time 189%. At the bottom, where AI got released to the masses, went up. The next push was 143%. Another drop down here at the beginning of beginning of 2025. But that didn't stop it from continuing. In fact, this low here, that was, it was a hard press against the previous low, but that's not a breakout. So we can just continue riding that up. all the way to the previous high of February last month, 308%. So yeah, there's a good example. Let's go Amazon. Same pattern. There's COVID. Oh, no, that's not it. There's COVID. Went up 125%, came back down to find the support at COVID, and then did it again, but this time 216 since AI.
Is this something that you would be willing to add to market analysis, like on a weekly basis?
Sure. Yep.
Because this gives me a much clearer picture of, oh, this is where the money's going, and it's going in to harvest that data
Yep.
at some point, at some level or another.
Yep. It's all about data. And then look at I don't know what Tesla's doing right now. Oh yeah, Tesla's at all-time highs. You know, Tesla is a huge tech company. It's all driven by data. I mean, think about it. It's like this here, right, is a massive source of data. But the car, oof, tons of data in there too. And what's great about those cars is that they connect to your phone. So the car can actually mirror the phone data and send that off to Tesla.
What'd be nice is to have a Robin Hood scenario where a system set up where people could take advantage. You know, the whole Robin Hood story with GameStop.
Yep. Yeah, of course, that's not going to give us anything. I don't know if I can look up X, but here's Palantir. Oh, look. That's when AI was launched. Oops. $3,200%. 32x. Yeah, you're absolutely right. I anticipate that the dexes will be that source for Robinhood, for the Robinhood of the world. And I say that because let's go back. Let's just bring up, here's Wing Riders. It's a Cardano dex. You know, out of all of the coins currently, out of all of the main altcoins, we call them the boomer coins because now they're 10, 15 years old, some of them now. Out of all of them, ADA is positioned the greatest for the least amount of manipulation simply because there are no ETFs being issued on them. But here, I can go ahead and take ADA. You know, I don't have any in this particular wallet here, but I can take ADA, trade it for another token right here, pick from all of them. Here's Midnight. Oh, there's news about Midnight. We have to talk about that before we go. You know, I can just do that right here, right now, totally private. DEXs are the way that I think that we're going to see peer-to-peer trading occur. So and if people adopt the mentality of self-governance, this is the path to everybody being their own Robinhood. Because these transactions they're so cheap and they're getting cheaper all the time. The news about the news about midnight. Midnight, I think it was yesterday I saw that. Let me just do a search here because I'm sure that the article will come up. Yep, there we go.
Well, at 2 a.m. yesterday morning, like early Wednesday morning, they had quite a large candle.
Yes. Yes,
and then
indeed.
the next candle after that, I'm on the 4-hour chart, was also equally as large. Oh, look at that, eh? So what does this mean?
So now people who got their first midnight and were starting to trade it on Binance, they are eligible to qualify for another midnight airdrop. And so what that means is that, hey, that's their way of marketing the stock known as midnight on their platform. And the reason they're not doing that because they want to manipulate it. They're doing it because they recognize the formidable asset that it is. And so they offer this as a, hey, come and get some early tokens of airdrop, because on March 11th, you will be able to trade that at spot prices with these pairs. But spot price, if you're spot trading, now you can leverage it. That doesn't leverage night. But Binance is willing to leverage to you. They're willing to let you borrow $5 for every dollar you give them to trade midnight now.
So why did it create a drop in price?
Volatility. The fact that it would go down at the same time as it went up as well, like this here, is just volatility. That volatility, it would go up. What did it go up? Went up 14% and then immediately in the same 4-hour period dropped 24%.
What was the date on that news item?
March 12th.
Today.
Yep.
Good.
That's today? Oh,
Yep.
wow. That is today.
Okay, so it's old news.
Yep. Here's a post from March 11th. Let's go see. This is on X.
What
I'm
time
not
was
signed
that
in with
post?
this profile. 5:36 a.m. yesterday. So the volatility, when did that show up?
2 o'clock.
2 o'clock in the morning yesterday. Yeah. So here is where we start getting into the idea of volumes. Okay. So what would make it go up and down super fast like that other than a whole pile of volume? Well, what will happen is that companies like Binance, and Binance is think of that as your stock market for all the different stocks that are available. One of many stock markets. That's the best way to do it. We're not centralizing the stock markets. We're going to have many different providers of the stock market, but it's all tracked through because otherwise they won't be able to keep their licenses. So this volatility would be the volume that Binance traded with against their clients. That's how they always do this. Look, it comes in real fast. People are like, woohoo! If this was retail sentiment, it would have continued. But they couldn't have that because they don't want people making money with their platforms. And so then they would flood it. They would be like, "Oh, we got a whole bunch of midnight," or probably even more so, they would just short it to give the impression that there's volume going in the opposite direction. When you're working with these platforms, let's go to KuCoin here. I'll show you how this works. Because you have to remember, what did the retail trader see to get them to panic and panic sell? Because that drop in price would have been amplified by people's fear. They bought, price went up, and then the price went below where they bought. And as soon as that happens, you know full well, especially if there's leverage. I got to sign in here.
So why don't they want you making money with their platform?
But it's kind of like with the stock market. They don't want the retail making money. They need to take that money.
Isn't this just another form of attention token?
Oh yeah. Yeah.
What-
So
what-
They want us to have our attention on these things. And so that generates more of the fear and greed and fear. It's no different than the games we play. They want our attention.
yep.
It's kind of like watching a soap opera. What's going to happen next?
Mm-hmm. In KuCoin is a major platform as well. I use it because it's not a BlackRock company, and they keep on riding the line on their compliance. But when you go to trade, let's just close that. I see what they're doing. So when I go to trade, I can look at the chart or I can look at market depth. This is real time. Second by second. So right now, there's more long volume.
Would that not be
Bought
able
in?
to use as market sentiment?
Yes, you could use this as market sentiment. It's after the fact. Everything that we're looking at is history. What the institutions have is the jump on it because of the heat maps. Right? There's your buy and your sell button. So the exchanges watch that. And I don't know, KuCoin might very well do it as well. I don't know. But you can bet your boots that the mainstream ones are definitely going to do that. The Binances, KuCoin, Kraken, Gemini, all of them. They're gonna have that heat map for sure. But where this goes is the retail trader interprets this. And they see, look at all this green. That means it's a good thing. We're going to see over time, we're going to see a rise in the prices. But that is not always the case. So more people are buying at these prices. This is right now price. And the further we stray from right now, the more buy positions are in place. So here we're down, was that 1.5 cents? Over up here, we're up 1.5 cents. That's what we call market depth. What is right now? What are the positions being taken? Well, when the price went up and it went crazy, it would have been heavy, heavy green. But then someone at Binance would have been like, oh my gosh, look at all these people making that money. Ugh, look at that. They're up 14%. If you go to a casino and you're up 3%, they will send a cooler to your table. Does anybody know what a cooler is? Oh. So
full of beer.
Knows what's that?
A cooler full of beer. So, so get your three
Yeah.
sheets to the wind.
If only,
Yeah.
if only that were true. So a cooler. There's actually a movie about this. It's got William Macy as the starring role in that one. Depressing movie though. It's a depressing movie. Don't watch it unless you're interested. But it's casinos. When someone is at a table and they are having a streak, they have people that they have hired and they just sit in the back room and they're just having lunch or whatever. And then they'll get called, go to table 48. And their job is to go to that table because they have been hired due to their ability to attract bad luck. Their job is a cooler.
Well, I
That's
could be a
their name.
cooler when it
Yeah.
comes to gambling.
So yeah, if you have people in the casino and because they have all that tracked, you walk in there, they got your face. They don't even care what your name is. They got your face. That's your identifier. And so when they see your face at a table and they can see that your face is pulling in chips, they send a cooler. You don't even know who it is, but they're there at the table. Or they're close by, walking behind you back and forth, looking like they're looking for a table. That's their job. Their job is to blend in, but provide bad luck wherever there's good luck being on the table. They've got the heat map on their screens showing which tables are paying out. Oh, send a cooler to that table.
It would be very
So-
curious as to know what the configuration of the individual who draws in bad luck is. That's
Well-
fascinating.
I told you that movie was depressing. His character is depressing. But there you have it. So people are on, they're on Binance. Binance gives this data as well. Like all of the major trading platforms, they have the market depth. Here's the feed. Provides all kinds of, oh, look, this is what I did. Oh, here's another news flash, right? There's some info on the coin. But now back at the chart, people who are doing especially high frequency trading, where they are going in and out, I say high frequency, let's call it scalping, because high frequency is that's where they're using bots. But even the bots, they'll program the bots to respond to this stuff. And by the time, especially if you're running high frequency trading, unless you are watching it in real time, you will not catch the hallucination of your bot. And the data will all of a sudden go from green. So it's like, whoa, we saw the price goes up. Woo, yeah, all green. And then all of a sudden Binance comes in and they just start shorting it. So then it goes red. Everybody panics. Why? Because when the price goes down, it's predictable. Look at this. This is all within this is the hour chart. I'm going to go down. Let's go right down to 5 minutes. Look at that. It all happened right here. Up 12% in one 5-minute bar. That can't happen. That's not allowed. Why do you think they stopped the stock market from trading when GameStop had a bunch of people make 600%? They had to cease trading on it. They had to delist it. That's how bad it was. They had to delist it. So you know full well Binance was preparing for this. Why? Because the article showed, I closed that one. The article showed that the first talk of it was a month ago. So Binance just gets ready and they let it go on the market and everybody goes, yippee! I can spot trade midnight now, and I can leverage my money. So when I put my money in and it goes up 10%, I'm actually 10xing because I'm leveraging it, or 5x because I'm leveraging 5 to 1. I'm putting in $100 and Binance will let me trade with 500. So then my $100 just went up. And then Binance says, no, you don't. And they short it the opposite direction. Well, people who are leveraged, right? They started here. It went up, and within 5 minutes, it went back down again and closed at 1.1% below where they started. Oh, that didn't get everybody out. In fact, those people that hung on, they were like, it's going back up. Yay. 10 minutes later, oh my gosh. Down 6%. That's 6%. You've leveraged $100 at $500. What's 6% to $500?
30.
$30. You've just lost 30% of your money.
It was 4 hours from that spike up to the
Yep.
spike down. 4 hours exactly.
Yeah, there it is. 4 hours, 5 minutes. You're right. Down 15%. 15% off of 500? $75. You've lost 75% of your money now. All within a period of 5 hours. And that is why I will only go back into this. I started playing around with this a little bit last year. Some of you might remember that. Or we did some leverage trading, but it worked against me. And I just cut. I was like, nope, I'm not going to wait. I'm going to wait until we're actually in the bull season. We're not there yet. Once we're bull, you can bet your boots I'll be going back into there and leveraging those movements. But right now, I'm not going to do it. The reason why I didn't want to want to short this down is because I myself would have wanted more data in a bearish market. Well, now I have it. I've been watching it. I've been learning about it. Now I'm gathering that data. And as an update, I haven't updated this yet. So, but this is what's coming next. Lux Algo is a algorithm that I had that I actually built. Most of what I did in trading, I built off of Lux Algo. And Lux Algo just came out. They just released. I knew they were working on it, and this week they just came out with it. Agentic trading.
Wow.
The data that Lux provides in their algorithm allows for swing traders, trend traders, pivot traders. If you are a fundamental, you can use their algorithm to help with that. They provide data on the fundamentals. If you want to scalp, if you want to bot, Lux allows you to do that. But now, the thing that you and I were talking about, Ian, how do we take this data and actually provide insights that allow us to trade? They just released this 2 days ago. I could put in the data like this is where I want to take this. Okay, so these kinds of things happen. I would never want to be in that situation. But now that it's happened, knowing that that's available, adding that as an asset on Binance, the other exchanges will follow suit. And once, 3 or 4 on board, then when one comes on, we're not going to see this kind of volatility occur because it would mean that now all of the exchanges would have to coordinate those attacks. And that's tough for them to do. Tougher for them to do.
Well, that becomes a RICO issue.
Yep. Yeah. So my intention, and this is how I would do it. What time is it? We've gone way over. Everybody good? Obviously everybody's good because you're still here. So the way to do this, and this is what I was working on at the end of 2019, going into 2020, what I was doing was that I was mapping the impulses. I'm going to go to a different asset because it's going to be easier. This one here is not what I'm after. So I'm going to go back. This is a 2-hour chart. Here's ADA. And what I'm just going to cancel this out. So what I did was that I went through all of the bearish movements. So this is a bearish trend. And you measure out of all the bearish trends. And then the data that I pulled was between 2021 and 2023 on ADA. Between 2021 and 2023, I have, I don't know how many months worth of trends analyzed in my Google account. Take every impulse, measure it. This one's 13%. What's the next impulse? The next impulse is down 15%. What's the next one? Down. And I'm doing this fast because I can see where the highs and lows are. I don't expect other people to learn how to do this. But now that's 12%. And I put that into a spreadsheet, and then I figured out when ADA is bearish, the average impulse is, and when, because those are the impulses, but after an impulse, what do you have? Retracement. So then in a bearish market, what's the average retracement? And I had the average for both bullish and bearish markets, what the average impulse and retracements were. What that allows me to do is to give proper data to a DCA bot that automatically trades when it's at the averages, because that's the averages, and then there's a probability curve to that average. And as long as I make sure that that bot trades within the mean of that probability curve, I can guarantee, I shouldn't say that, I can more adequately predict my success rate. And once you have a success rate, then you just have to calculate how much you're willing to risk. So now, with Lux Algo having completed that work that I was wanting to build, Lux Algo carried on the torch, so to speak. Like, you can bet your boots, I'm just going to tell the AI, hey, get me the data I need to create a DCA bot that's based off of the average impulses and retracements of the bullish and bearish trends on the 5-minute chart, on the 2-hour chart, on the 4-hour chart, on the daily chart, and I'll find a sweet spot. Then I'll be able to tell people, hey, do you want to subscribe to a bot? And I'm thinking that if I can get this dialed in, I'll teach people how they can do it. They can do it themselves. That'll be way cheaper. But if I get it dialed in, I'll turn this into a next-gen merchant product, and we all start building a treasury with, I don't know, 10% of the winnings that we provide for the clients that come on board and open a trading account with us. We start bringing governance to a treasury that then, again, helps people make some money through this phase. So yeah, that just got released yesterday. I'm going to go play with that later. Because Lex gives us a lot of data. I'm just going to go ahead and do an update on it just to see if I can play around with it right now. We're in co-work now, so by the way.
Is that an actual bot? The Lux algo? Is that what that was?
It's not an actual bot. No, it will allow you to create a bot or send a signal to a bot.
On Binance.
Any of the major, any you can do it with any one
Okay,
of
so
them.
what was it? What was it? How would you describe what they just released then? It's a what?
It is an agent that allows you to get insights from the data that Lux provides through their subscription. Yeah, I haven't played with it yet. I don't even know. I might have to go look for it.
So how much is their subscription? Approximately.
There's I think it was like 80 something a month or something like that.
Yeah, okay,
price
just,
Yeah,
$800.
two different levels. Build indicators and strategies with AI. That's $90 a month. Oh no, that's sorry, $90 once, then $120 a month.
So you got to be a serious player to.
Yeah, you got to know what you're doing. Yeah, this is not going to be for people who want to just jump in and start working with it. I mean, unless you've got the spare change, I would if someone wants to do this, I would recommend that they focus on like a holding position. Don't try to trade if you're just starting out. But let's go see inputs here. Again, I haven't played with it yet, so I don't know. Yeah, the other thing, folks, is it's entirely possible that I won't have access to it simply because when I got access to this, I have a lifetime membership to Lux Algo as a platform. But I don't know whether or not their newest update is something that I'm allowed to use, because that's a pretty significant update to add an agent. Resources. Let's go see what they say here.
Well, you could sue them then for false advertising, giving you a lifetime membership into what?
Well, I still have the data. That's the thing.
Yeah.
AI strategies, algos. Oh, here we go. Quant agent, blah, blah, blah. Documentation. How do I get access? You can get access here. Aha. Open sidebar. Look at that. There it is. Can I log in? I doubt that I'll be able to log in, as I never had to. I might have to look this up, folks. I have not been trading. I'm not gonna go through this right now. But there you have it. Now I'm gonna go find out what I can do with it. Okay, yep, so you're going to have credit balances. Makes sense. User credits reset the first of every month. Yeah, so this will be over and above the algo on TradingView. Oh, look at that. Okay, so it is an okay. It's not the same thing that I thought it was. The way that I read it was that I would be able to use Lux Algo, the software that I have access to. I would be able to use this to build the algorithm that I want. No, what they've done is that they've said, here's your ability. We've given you now an online platform so you can go and have a conversation with an LLM to look at search trending scripts. Oh, but of course I got to sign in. So that's what it boils down to. It's simply an agent that has trading speciality. It's not the actual TradingView algorithm. Cool. All right. Well, I'll still go and play around and see what the tokens are and stuff like that, because I would not be surprised if it will in some way.
So you got to do all the groundwork still.
Yeah, still got to do the groundwork. Let's see here.
Well, I've got to run.
All right. Have a good rest of the day. Yeah, this is for developing PineScript. So if you want to make an indicator, or you want to make a bot, or you want to make a automated strategy,
Algorithm.
it is geared towards that.
Okay.
Have an awesome day.
Talk to you tomorrow.
You betcha.
Bye.
See you later. Wow, we covered a lot of content. Any other questions? I'll end the stream here.
Well,